You know how much money you lost on your last car? Not the monthly payment, the real number, the true cost of the decision. I will tell you the exact number in a few minutes, and once you see it, you will not be able to stop thinking about it. Almost 30% of all new cars on the road today are leased, not bought, leased. Millions of people paying every single month for something they will never own. Financing the most aggressive depreciation in the vehicle's history. Handing back the keys after 3 years with zero assets to show for it. And they are calling it a lifestyle. It is not a lifestyle. It is the exact reason you will never be wealthy. In this video, I will show you exactly how the scam works. The psychological tricks dealerships use to manipulate your own math. The real cost that is stealing millions from your future. And the exact framework to stop renting depreciation and start building actual wealth. If you want the unfiltered truth about your money that the car industry desperately does not want you to know, subscribe to the channel right now. You will have 11 reasons to do so in the next few minutes. Let's look at the math. Problem number 1. The monthly payment illusion. You walk into the dealership. The showroom is perfectly lit. The coffee is free. The cars smell like leather and success. You sit down at the desk and the salesman asks you the most dangerous question in personal finance. What kind of monthly payment are you looking for? That is where you lose. The moment you answer that question, you stopped buying a vehicle. You started negotiating a monthly cash flow allowance. And that is exactly where the illusion begins. The financial industry knows human psychology better than you do. It knows that if it tells you a car costs $80,000, your brain will panic. $80,000 is a number that scares people. But if it tells you that you can drive an $80,000 car for just $899 a month, suddenly your brain rationalizes it. I make good money. I can afford $900 a month. This is how intelligent people make catastrophic financial decisions. They focus entirely on whether they can afford the monthly payment. They completely ignore the total cost of the transaction. When you lease a car, you are not paying for the car. You are paying for the depreciation of the car during the 3 years you drive it. You are literally financing the steepest and most aggressive drop in the vehicle's value. You absorb all the financial damage of the depreciation, and the dealership gets the car back. It is financial bloodletting disguised as a subscription service. Problem number 2. The infinite treadmill. Let's look at what actually happens over a 36-month lease. You put down $3,000 at signing. You pay $800 a month for 3 years. That is $28,800 in monthly payments, plus the $3,000 down. You spent nearly $32,000 over 3 years. Month 36 arrives. The lease is up. You drive the car back to the dealership. You hand them the keys. And what do you have to show for your $32,000? Absolutely nothing. Zero equity. Zero assets. You do not even have a steering wheel to take home. You are completely vehicleless, but you still need to get to work on Monday. So what do? You sit back down at the exact same desk. You drink another free coffee. And you sign another 3-year lease. You are on an infinite treadmill. You have guaranteed yourself a car payment for the rest of your natural life. The car industry has turned you from a vehicle owner into a permanent lifelong subscriber to their revenue stream. You never own anything. But you never stop paying. That is not a lifestyle. That is a prison. Problem number 3. The mileage and wear and tear trap. Here is where it gets genuinely insulting. You are paying thousands of dollars a year to rent this luxury vehicle, but you are terrified to actually use it. Leases come with strict mileage limits. 10,000, maybe 12,000 miles a year. If you go over, they charge you 25 to 30 cents per mile. You want to take a spontaneous road trip with your family? You have to do the math first to see if you can afford the mileage penalty. You are paying for a luxury car, but you are stressed every single time you drive it. And then there is the wear and tear. When you return the car in 3 years, it has to be pristine. If there is a scratch on the door, you pay. If the tires are worn down, you buy new tires for a car you are giving back to them tomorrow. Think about the absurdity of this. You are paying out of your own pocket to maintain the resale value of an asset that belongs to someone else. You are literally paying to protect the dealership's profit margin. You are treating the car like a museum piece because you know the inspector is waiting at the end of the term with a clipboard and a penalty fee. Problem number 4, the business write-off myth. This trap catches the highest earners: business owners, real estate agents, consultants. They lease a $90,000 Mercedes because their accountant told them it is a tax write-off. They think a write-off means the car is free. Let me be very clear about how the tax code actually works, because this lie destroys corporate wealth. A write-off does not mean the government buys you a car. A write-off simply means you do not pay income tax on the money you spent on the lease. If you are in a 30% tax bracket and you spend $10,000 a year on a lease, you save $3,000 in taxes, but you still spent $10,000. You are voluntarily throwing away $7,000 of your own hard-earned cash just to save $3,000 on your tax bill. Spending $1 to save 30 cents is not a genius financial strategy. It is an ego-driven justification. You did not lease the Mercedes because it was mathematically optimal for your LLC. You leased the Mercedes because you wanted to look successful to your clients, and you used the tax code as an excuse to ignore the terrible math. Do not let the IRS subsidize your ego at the expense of your actual net worth. If you are watching this and recognizing yourself in these patterns, share this video with someone who needs to see it. It is the most valuable thing you can do for someone today. And if you have not subscribed yet, do that right now. What comes next will change the way you look at every car you see on the road. Problem number 5, the stolen millions. This is the most terrifying part of this video. This is the opportunity cost, the invisible slaughterhouse where your future wealth goes to die. Let's go back to that $800 monthly payment. To most people, $800 is just a line item in the monthly budget. But let's look at what that $800 could have been. If instead of leasing a depreciating piece of metal every 3 years, you bought a reliable used car in cash, and you took that exact same $800 a month and invested it into an S&P 500 index fund. Let's assume a standard, historically accurate 8% average annual return. After 10 years of no car payment, that account would be worth almost $150,000. After 20 years, $470,000. After 30 years, $1.1 million. After 40 years of your working life, $2.7 million. Read that math again. Let the number land. You did not pay $800 a month for a BMW. You paid $2.7 million of your future wealth. You traded a multi-million-dollar retirement empire for a sunroof and Apple CarPlay. You literally robbed your future self of financial freedom just to impress people at a red light for 36 months. Every time you sign a car lease, you are burning a winning lottery ticket. Problem number 6, the depreciation double dip. You need to understand how the dealership actually sees you. To them, a lease is the most profitable transaction in the building. Why? Because they get to double dip on the same asset. Phase 1. You lease the brand new car. You pay for the steepest part of the depreciation curve. You pay the interest rate embedded in the lease. You absorb all the financial shock of driving the car off the lot. Phase 2. You return the car in 3 years. It only has 30,000 miles on it because you were terrified of the mileage penalties. You kept it perfectly clean. The dealership takes the car, runs it through the car wash, puts a certified pre-owned sticker on the windshield, and sells it to the next person for a massive profit. You did all the heavy lifting. You funded the depreciation. You maintained their inventory. You are not their customer. You are their unpaid inventory manager. Problem number 7. The anxiety of status. If the math is this terrible, why do millions of people still do it? Because of the psychological drug of the new car smell and the deep, unspoken fear of looking average. Cars are the most visible indicator of wealth in modern society. You cannot wear your bank account balance on your forehead. You cannot tape your investment portfolio to your jacket. But you drive your car everywhere. It is the ultimate public performance. People lease cars because they are terrified that if they drive a 10-year-old Honda, their neighbors will think they are struggling. They are terrified their coworkers will judge them, so they rent a depreciating liability to buy temporary social approval from strangers. But here is the irony. The genuinely wealthy people, the people who actually have $1 million in liquid assets, are not driving leased luxury cars. Statistically, they drive Fords. They drive Toyotas. They drive Subarus. They drive cars they bought in cash and keep for 10 to 15 years. The person in the $100,000 Porsche is usually heavily leveraged, stressed about cash flow, and one missed paycheck away from a crisis. Before I give you the solutions, if this is making sense to you, hit the like button right now. It helps the algorithm show this to the next person who is about to sign a 36-month lease they cannot afford. It is literally the most generous act you can do for someone today. Solution number 1. The cash car rule. This is the hardest pill to swallow, but it is the cure to the disease. If you cannot buy the car in cash, you cannot afford the car, period. I do not care what the dealership financing department tells you. I do not care what promotional interest rate they are offering. If you do not have the liquidity to write a check for the total purchase price, you are buying outside of your wealth level. Save the cash. Buy a reliable 3 to 5-year-old used car. Let the first owner take the massive depreciation hit. Let the person who leased it absorb the financial damage. You buy the asset when the depreciation curve has flattened out. It still runs perfectly. It still has Bluetooth. It still gets you to work. But it does not steal your future. If you absolutely must finance a car in a true emergency to get to work, use the 24-10 rule. Put 20% down. Finance it for no more than 4 years. And the total monthly payment, including insurance, cannot exceed 10% of your gross income. If the math fails that test, walk away. Solution number 2. Drive it into the ground. The secret to automotive wealth is the 10-year horizon. Cars are tools. They are not investments. They are not status symbols. They are metal boxes designed to move your body from point A to point B safely. When you buy a car, your goal should be to drive it for a minimum of 10 years. Maintain it perfectly. Change the oil. Fix the brakes. A $2,000 repair bill on a paid-off car feels painful in the moment, but $2,000 for a repair is dramatically cheaper than signing up for $40,000 of new debt. Every month you drive a paid-off car is a month you are keeping your own money. The gap between the moment you pay off your car and the moment it finally dies is the most profitable financial window in your life. Extend that window for as long as mechanically possible. Solution number 3. The wealth redirect. This is how you weaponize the math. Once your car is paid off, do not change your budget. You are already used to living without that $600 or $800 a month. Your lifestyle has already adapted to the car payment, so you keep making the car payment. But you make it to yourself. You set up an automatic transfer every single month for the exact amount of your old car payment, and you send it directly into an S&P 500 index fund. You automate the discipline. You turn a liability expense into an asset-generating machine. That is how you capture the $2.7 million we talked about earlier. You simply redirect the cash flow from the dealership's pocket into your own brokerage account. You let compounding do the heavy lifting. Here is the bottom line. A car payment is not a fact of life. It is a choice. It is a choice to prioritize the present over the future. It is a choice to look rich today instead of actually being wealthy tomorrow. Stop treating dealerships like your financial advisors. Stop treating a lease like a lifestyle upgrade. It is a wealth destruction vehicle with heated seats. The Ultimate Flex is not a brand new car. The Ultimate Flex is a paid-off title, zero debt, and an investment portfolio that generates more money while you sleep than a luxury car loses in depreciation. If this video saved you from making a massive mistake at a dealership, hit the like button right now. It helps the algorithm show this to the next person who is about to sign a 36-month lease they cannot afford. Subscribe to the channel if you want real financial strategy without the performance. No jargon, no products to sell, just the honest math and what it means for your real life. Take care of yourselves. Keep your money. I will see you in the next one.